if price were a determinant of demand, as it should be in a fairly traded market, um, silver would be $100 an ounce or higher. But the manipulation and the suppression of the silver market has been extreme. I guess what I would say is different is the positioning of the commercial banks that are now long in the futures market, is the drawdown in physical supply. And I guess who in their right mind would want to be short in this market when the nickel market issue debacle in the London Metals Exchange in March showed just what can happen? And the concentrated short position in silver is many times what it was in nickel. It would be a epic disaster. So maybe, just maybe, the commercial banks have set a trap for the managed money who continue to go short. And maybe as prices rise, they won't come in and short the price. And price will become more a reflection of supply and of demand. Because right now, there's a disconnection there. And demand is well outpaced the supply. And you wouldn't know it by the price. And that's what's masquerading really what the true reality of what this market's all about right now. The very wealthy people, before Roosevelt confiscated gold, sent all their gold across the Atlantic in steamships to safe deposit boxes of Europe. They were cued in and clued in on hey, this is coming, better get your stuff out of the country. Well, I think that's what you're seeing right now. The biggest money in the world, or the industrials, or the hedge funds, or the family offices, or the sovereign wealth funds, they're drawing down supplies well before that moment happened. I mean, it was at 120 million ounces or so at Silver Squeeze. We're down to 34 million. We saw 37 million delivered to India in the month of August alone. We've seen the London Metals Exchange deliver like 45 million ounces in the month of September. And that's 8 million ounces, almost 10 million ounces, even more than that. 11 million ounces more than the price setting mechanism of the world has in the registered category. And if you take, I didn't see what it said, but last week, if you took the registered and the eligible and put it together, there was 218% more paper than all the silver inside the COMEX. So, you're talking, if you threw the eligible in there too, 1 out of every 2 would get paper settled, or 1 out of almost every 3. At the 1800% paper to physical discrepancy, 1 out of 18 would get their silver, the rest would get cash settled. We're almost at that rate. And if you look at the London Metals Exchange, which is supposed to be the epicenter, down to its lowest level since 2016, when they started recording silver stockpiles, all of a sudden these premiums are getting out of control. And is it getting out of control, or is it just the market's way of saying that the price that is quoted on COMEX is just flat out wrong? What concerns me more than anything is that you have the whole globe awoken to inflation, into geopolitical issues, into, half the refineries in Europe won't take our orders or are reluctant to do it because they're concerned about keeping the lights on with the energy problem into the winter. And all of the refineries here in the US are running at max capacity and are 90 days out. So when you talk about premiums that continue to escalate in the retail market, that's true. But what's even more frightening is the fact that from the COMEX to the London Metals Exchange to the ETFs, where you're seeing a continual, every single day, drawdown of silver by the authorized participants out of SLV, the biggest money in the world is pulling their metal off the exchanges, getting it out of harm's way, removing counterparty risk. And these are the epicenters of where the bars that are ground down into shot to make the planchets, to make the coins come from. And so if you can't get the bars from the very, very top, and it's already tight as hell in the wholesale market, in the retail market, when the elephant turns around and there's something that makes it say, hey, gosh, I need some gold and silver, it's already so hard to get right now. What's concerning to me more than anything is the drawdown in supply from the London Metals Exchange, from the COMEX, backdooring metal out of the ETFs. I mean, and you're talking gold too. We've seen almost 550 tons of gold come out of the COMEX and the London Metals Exchange, literally since the end of April. The Russian government removed the VAT tax and the capital gains tax on precious metals, imploring their citizenry to buy it. You see importations into silver, of silver into India that, will be as much as 50 million ounces already for the year. And their premiums are triple what they have normally been. So you're seeing the world accumulate metal. At the same time, the official stockpile of the US hasn't changed. So where is it all coming from? Well, it's interesting that you notice a massive drawdown in supply from the LME and from the COMEX. They're being bled dry. I've never experienced anything like this. In 2008, there was a defined beginning and a defined end, and this has just been a slow bleeding. And that's why I've been talking about it for the last 2 years. It used to be getting clients was 100 times harder than getting product. It's 100 times the other way right now. And I could see that happening. So if it's happening this much and you're seeing a reporting of a massive drawdown from all of these places, I mean, what is 35 million ounces anyway? What is 34 million if in 1 month, much more than that is sent off by the London Metals Exchange? Maybe it is rehypothecated. Maybe those numbers are make-believe. Are we to believe the CME group? I don't know. But I will say, in my opinion, we are closer to that moment than ever before. And when you look at all the metal that is leaving the US, the numbers came out at negative 136 tons of gold were shipped out, and in August. And who's buying all of that? Well, if you look at the numbers, you can see it's Hong Kong, it's Malaysia, it's Saudi Arabia, Thailand, Turkey, India, China. These countries are massively accumulating metal as the supplies from the top are being drawn down. I think it's just becoming very difficult to get silver. And there is an awful lot of overcapacity. I mean, there are open orders that go out, and certainly that's part of it. But something bigger is at foot here, and that is, I think it's becoming harder to get product from this level. Now, if you're talking the good delivery bars, if what Tyler is saying is true, well, when that comes up, then it's good night, Irene, because I don't know where you're going to get it. I have no idea. If all of a sudden you get to that point, the all-time low, I think, in registered was around 20 million ounces, I think. And if at the rate we're going, we're pretty close to that. At some point, they have to say you can't take delivery any longer, or the whole system blows up. So if price were a determinant of demand, as it should be in a fairly traded market, silver would be $100 an ounce or higher. $100 an ounce.